Hey, welcome to The Explainer. Today, we're going to break down a really wild financial event that sent shockwaves through the entire global market all in one day. And the craziest part? It all started with a political argument over Greenland.
Okay, so here's how we're going to tackle this. First, we'll get clear on what a Sell America trade even is. Then, we'll look at the totally unexpected trigger. After that, we'll trace the domino effect across four major markets, talk about the much bigger risk of something called capital wars, and then wrap up with the huge question all of this leaves us with. All right, let's start with the big one. What in the world does it actually mean when you hear traders on TV shouting about a Sell America trade? So, on January 20th, 2026, this phrase from strategist Krishna Guha was everywhere. He called it a global risk-off event. Now, that's just Wall Street talk for a day when everyone, everywhere, suddenly gets spooked and starts selling anything that seems even a little bit risky. And on this particular day, the risky thing was, well, America itself. So, what are we really talking about here? Think of it like a global vote of no confidence. But instead of ballots, investors are using their money. It's when people all over the world look at U.S. stocks, U.S. bonds, even the U.S. dollar, and suddenly decide, you know what, this feels too risky right now. And so they sell. And they sell fast. So you're probably thinking, what on earth could trigger such a massive, sudden panic? The answer is kind of strange, actually. It all started with a disagreement over that massive, icy island up north, Greenland. And this whole thing just blew up fast. It wasn't a slow burn. It went from a repeated offer to buy the island to a very firm no. That led to a threat of tariffs against a bunch of European countries. And in response, the EU immediately called an emergency meeting to figure out how to hit back. You can just imagine the uncertainty that created for the market. Okay, so you've got this political mess brewing. What happens next in the financial world? Well, when investors get scared, their money moves, and it moves fast. It sets off this incredible chain reaction, a domino effect that topples one market after another. All right, domino number one to fall, the US dollar itself. As investors around the world started getting nervous about America, they started selling their US dollars and buying up other currencies instead. And this is a perfect example of how it works. It's really just simple supply and demand. When a flood of US dollars hits the market all at once, the value drops. At the very same time, investors are rushing to buy other currencies, like the euro, which pushes its value way up in comparison. Next up, domino number two, US government bonds. Now, this is a big deal. These bonds are supposed to be one of the safest investments on the entire planet. So when you see investors dumping them, that is a major, major red flag. Okay, so bonds can be a little weird, kind of counterintuitive. Here's an easy way to think about it. Imagine a bond is like a concert ticket that guarantees you'll get $10 back at the door. If you're the only one selling a ticket, you can probably get the full $10 for it. But what if hundreds of people start selling their tickets at the exact same time? To get someone to buy your ticket, you have to lower the price, right? Maybe you sell it for $8. The thing is, the ticket itself still pays out that original $10. That extra $2 of profit for the buyer, that's the yield. So when lots of people sell bonds, the price goes down, but the yield goes up. And then, of course, you have the domino that everybody sees and talks about, the U.S. stock market. It's not surprising, right? A Sell America trade pretty much means selling stocks in American companies. And the big indexes, they took a real beating. I mean, just look at these numbers. You've got the Dow plummeting 800 points. Both the S&P 500 and the Nasdaq dropped by over 2% in a single day. This was a massive, coordinated move by investors to get away from risk. So, with all this selling going on, dollars, bonds, stocks, where's the money going? Well, while all of that was happening, there was one thing investors were buying up like crazy: gold. And that's because gold is the ultimate safe haven asset. You can think of it like a financial emergency bunker. When chaos and fear take over the markets, investors flee from all those other things we mentioned and pile into the perceived safety of gold. That huge rush of buyers drives its price way, way up. In this case, it was the biggest single-day jump since 2020. So you might be tempted to think, okay, one bad day in the market, it happens. But this event is pointing to something much, much bigger. A strategic risk that has experts really concerned. And this is where a guy like Ray Dalio, a true legend in the investing world, really puts it into perspective. He says we have to look past the usual fights over trade and start thinking about something he calls capital wars. Wars fought not with goods, but with money itself. So, what exactly is a capital war? Well, it's basically when countries start using investment as a weapon. Imagine a country that's mad at the US starts to strategically dump all the US bonds it owns just to cause chaos and make a political point. It's turning the global financial system into a battlefield. So, when you pull all this together, the trade, the market panic, this scary idea of capital wars, it forces us to ask a really huge, fundamental question about America's special place in the global economy. For as long as most of us can remember, the US has been the undisputed heavyweight champion of the financial world. I mean, look at this chart. American stocks alone make up more than half of the entire world stock market. That is just a staggering level of dominance. And this whole dominance is built on an idea, a theory you could call American exceptionalism. It's the belief that the US market is just uniquely stable, uniquely strong, and that's why its assets are worth so much. But what some analysts are saying now is that maybe, just maybe, that belief is already baked into the price, leaving absolutely no room for error. And that's really the kicker, isn't it? This whole thing started with a small dispute over Greenland, but it triggered a global sell-off because it planted a tiny seed of doubt, a doubt about whether the US is still a reliable partner. And if that idea starts to stick, it leaves us with a profound question about the future of global investing. Where does all that money go next?